Bitcoin's price is climbing, but where's the buzz? This video explores why social interest in crypto is surprisingly low and what might spark the next bull run. We'll look at everything from global liquidity and institutional investment to the rise of DeFi and NFTs. Don't miss this market analysis and learn why now might be the perfect time to invest. In the latest video from Crypto Rover, Bitcoin is consolidating, forming a potential bull flag while he holds a $4 million Ethereum long position. A CME gap around $17,000 suggests a likely move to fill that gap. Global liquidity is increasing, hinting at Bitcoin's upward trend, possibly targeting $140,000. His Ethereum position is up $300,000, and he anticipates Ethereum reaching $4,000 due to increasing transaction counts and a divergence in Bitcoin dominance. Bitcoin's correlation with global liquidity is an interesting point. Recent news shows central banks are still grappling with inflation, which could lead to more liquidity injections. If this trend continues, it might support crypto, Rover's bullish Bitcoin prediction. However, the crypto market is notoriously volatile, and regulatory uncertainty still looms. It will be interesting to see if these predictions play out, particularly given the recent fluctuations in the market. In the latest video from Lark Davis, he discusses how whales and institutions are quietly accumulating altcoins, anticipating significant price movements driven by emerging narratives. He points out the increasing number of ETF applications for altcoins like Solana and Dogecoin, indicating a potential influx of billions of dollars. Lark also discusses the growing trend of treasury companies adding Bitcoin and other cryptocurrencies such as Ethereum and Solana to their balance sheets. Other key narratives include real-world assets, RWA, projected to grow to $30 trillion by 2034, with projects like Plume and Maple Finance positioned to benefit. AI agents and DeFi are also highlighted as potential growth areas, with platforms like Virtual Protocol and Kamamino Finance leading the charge. Lark encourages viewers to pay attention to these narratives as they unfold. Numbers: around $50 billion of total inflows to Bitcoin ETFs alone, $30 trillion RWA projection by 2034. While the increasing institutional interest in crypto is exciting, I think it's important to remember that narratives can shift quickly in this space. The regulatory landscape around ETFs is still evolving, and the success of RWA projects depends on real-world adoption. While these narratives hold promise, I believe a diversified approach and a healthy dose of skepticism are still warranted when investing in crypto. In the latest video from Ben Cowan, he talks about Bitcoin's price action and the surprisingly low social interest in crypto. Bitcoin is over $100,000, yet the hype is nowhere near 2021 levels. He shows his social risk chart, combining several social media metrics, indicating extremely low crypto interest. Ben points out that altcoins are suffering while Bitcoin dominance rises, similar to the 2018 to 2019 period of quantitative tightening. He believes that several factors could bring back broader crypto interest: a significant Bitcoin price surge, the crypto industry cleaning up scams, and better macroeconomic conditions, including lower inflation. It's true that the crypto market feels different this time around. While Bitcoin's price is impressive, the lack of widespread enthusiasm is noticeable. This could be due to a number of factors, like the lingering effects of the 2022 bear market, regulatory uncertainty, and the general economic climate. However, I also think the focus on Bitcoin's price overlooks the significant advancements happening in other areas of the crypto ecosystem, like decentralized finance, DeFi, and non-fungible tokens, NFTs. These sectors are continuing to innovate and attract users, even if the overall market sentiment isn't as exuberant as before. In the latest video from Coin Bureau, Nick discusses the ongoing housing market crisis, arguing it's not a crash like 2008, but a great stagnation. Several factors contribute to this: high mortgage rates around 7%, median home prices at record highs of $414,000, and 75% of U.S. households unable to afford a median-priced home. He explains the locking effect, where existing homeowners with low mortgage rates are hesitant to sell, restricting supply. New construction is also slowing down due to higher material costs, labor shortages, and builder confidence hitting a 10-year low. The demand side is a battle between cash-rich baby boomers, small investors seeking rental yields, and struggling first-time buyers, further pressuring entry-level home prices. The video also touches upon rising mortgage delinquencies and foreclosures, particularly in overheated markets like Florida. Finally, Nick connects the housing market stagnation to the commercial real estate crisis and the potential impact on regional banks. He concludes that high mortgage rates will likely persist, making home ownership increasingly difficult and impacting generational wealth. I think Nick's analysis is spot on. News articles about rising interest rates and the struggles of first-time home buyers support his points. It's a complex situation, and while some markets might experience price drops, a widespread crash seems unlikely given the current conditions. It's more of a slow burn, making it harder for many to achieve the dream of homeownership. The commercial real estate situation adds another layer of concern, and its potential ripple effects on the broader economy are worth watching closely. In the latest video from Crypto Banter, the host reviews the BitKey Bitcoin wallet, emphasizing its multi-signature recovery feature. The wallet, created by Jack Dorsey and Block, splits keys three ways: your mobile, the hardware device, and BitKey's secure service. This setup ensures recovery even if two components are lost. The video demonstrates setting up the wallet, adding a trusted contact who cannot move funds, buying Bitcoin, setting spending limits, adding fingerprints, and the inheritance function. The host lost his BitKey and shows the 7-day recovery process, ordering a replacement for $150 and restoring the wallet. He concludes by recommending BitKey for its security, simplicity, and premium design. It's interesting to see how hardware wallets are evolving to address security and recovery concerns. The multi-signature approach seems like a solid way to balance security and accessibility. While the price point of $150 might be a barrier for some, the peace of mind it offers could be worth it for those serious about securing their Bitcoin. The emphasis on inheritance planning is also a practical aspect, highlighting the long-term perspective many Bitcoin holders have. This thorough review by Crypto Banter certainly showcases BitKey as strong competition in the crypto wallet space. In the latest video from Crypto Casey, she discusses a rare Bitcoin price action signal based on the global liquidity index M2 money supply. This signal, showing increased global money supply, has historically preceded Bitcoin bull runs, like in 2017 and 2020. Crypto Casey notes that projections suggest a similar breakout, potentially leading to significant Bitcoin price increases. She highlights that if this projection holds true and coupled with the increasing global money supply, Bitcoin could see gains between 8x and 20x its 2022 low of $16,000. This puts conservative price predictions around $128,000, mid-range at $192,000, and an optimistic high of $320,000. Unlike past cycles, this time includes institutional investors and even countries buying Bitcoin, creating a much more bullish environment. It's fascinating how closely Bitcoin's price seems to follow global liquidity trends. While the M2 money supply correlation is interesting, it's just one factor among many. The crypto market is still highly volatile and lots of things can affect prices. Plus, these projections are not guarantees, so it's important to be cautious. We've seen surprising shifts in the past. This reminds me of how some analysts predicted Bitcoin would hit $100,000 in 2021, which didn't happen. It's good to stay informed about these signals, but relying solely on one indicator might be risky. It's always good to keep up with the latest news and understand the bigger picture.